Alright, so, really, I'm just making a video. I figured I'd kind of just share my thoughts aloud. Just kind of what I'm reviewing right now. I'm just kind of looking at. So, this video is going to be nearly, as of right now, all about Forex and just trading small and, scaling out of trades. Basically taking scalps. We're scalping part out. So that's kind of going to be the overview of what I'm doing right now and just looking at. So again, just kind of share my thoughts aloud. There's not going to be any real major structure to this video. So let me just start. Let's just get started. I really, really like Forex, and I am planning to transition into that very, very soon. It's part of the reason why I like stocks, or, shifting away from the E-mini and into stocks, because number one, I can trade many markets and I can keep the risk all the same, and I can very comfortably scale in, scale out, and change up my position sizing. With that said, I plan on one day going back to the E-mini. Just not right now, because I'm very happy with what I'm doing. And I can still trade the spider, so I'm still technically trading what the E-mini is doing, just using the spider. So I've been looking at just a bunch of different markets, kind of thinking, I'm just thinking a lot of traders, in my opinion, when they're starting out, they're so focused on hitting home runs, hitting 10-point trades or all this and that. And I think it's more important to focus on, there's nothing wrong with swing trading, but I just think, I'm realizing more and more that my style is more scalping. I love breakouts. Selling this close, stop up here, scalping part out down here, and getting out the rest where the always in traders get out. That's just kind of that's just kind of what I like to do. So, for example, selling here, stop up here, and this bar is about 9 pips, so maybe you take part off 9 cents lower somewhere down here, and you get out the rest up here, and you trade small. And I'm going to keep talking about trading small, and I'm going to keep saying trading small, trade small, trade small, and I'm going to say it until I get really annoying about it, because that, in my opinion, is the quickest and most efficient way to become profitable, is to give yourself room to manage trades. Most people, like look right here. It's kind of the same example. If you buy, put your stop down here, and if you can, scale in. It's probably better if you can scale in. But at least buy, stop down here. And if you did that 1 times, there's 2 times. You could take profits. Even here, if you're selling, stop maybe here, probably up here. And then, that's 460 to 490. It's about 36 pips. Well, trade small enough to where you can use that stop and then look to scale in higher. Or if you sell up here, maybe you get out here, sell higher. But, regardless, or just wait for something like this, sell this close, put your stop down here, and you make money. If you're up at, you could even sell somewhere in here, anywhere in here. Put your stop up here. Get a bear breakout, move your stop up to here, and or just sell when you get the breakout, stop up here, scalp part out at 10, 20 cents lower, whatever that is, and then you see there will be a second leg down, possible exhaustion, but probably not strong enough to make it clearly always in long yet. And then you get this weak sell off. We touch the close, and you get a strong bull bar. So get out of your remaining position above this bull bar at 1120. And if you want, you see a real strong rally, just buy the market and buy more at a 50% pullback, or just buy at a 50% pullback and take profits. If you just do the math, to me, it's a lot more effective than, buy this close, get out here, buy here, and hold. That's great, and that is profitable. So if you love doing that, then more power to you. But I just think I like to, it goes into personality. I like taking trades, and one of my weaknesses can be over trading. And what I have learned through time is, I am much more likely to overtrade by trading one market only, especially when I don't allow myself to trade small. That's one thing I've noticed by trading, stocks, for example, is it gives me the freedom to, look at Walmart or QCOM, whatever that is. This is a monthly chart, but let me go back to 5 minutes. So look at this market, sell this close, or sell 3 bear bars down, stop up here, scalp out. Walmart, second bar closing on its low, stop up here, take part off, scalp out, always in bulls, always in bears, get out. So if I'm holding short, I definitely get out here. If I can, buy this low, stop down here, scalp out 10 cents. Facebook, I bought this, but really I would have preferred to, originally had a stop down here. I scaled in more during this bar, kept my stop down here, got out break even, but I would have much rather, I should have just exited on this close, especially when there's third bear bar, betting on a second leg down, and then, I could have just sold that close or something, but that's okay. Over here, sell this close, stop up here, take part off, always in bulls, definitely get out here, So always in, to me, always in's a foundation for me. And it gives, knowing what the always in direction is, tells you what's the best way to, the best thing to do. So, right here, bulls are buying above this bar. It's big risk, but it's always in long. So if a bull buys above, no reason to get out, and they probably get out below here, definitely below here. Well, therefore I know that buy for any reason, Here, if I buy 10 or 20, 30 cents lower, we're probably going to have to test this close, and I can get out, Down here, it looks like a leg in a trading range. We close this gap over here. So just buy in here, scalp out. So I like scalping, and I like high probability trades. And I've just noticed over time that that's what suits me. But, that doesn't mean, like for instance right here, this is 5 in the morning, so I'm 4:50 in the morning Central Time. I'm not going to trade at that. I'm going to be asleep, hopefully. But here, this is where you trade always in, just sell, and hopefully you stay short. Maybe you take profits as it's going lower, but Then you get a bear breakout, move your stop, another bear breakout. Always in bulls. Sorry, always in bears get out there. So for me, knowing always in and understanding it, you know, I think it's really important for people to really try and get good at always in. And, I'm not saying one needs to get good enough to where when they see this market, they go, okay, always in long, you know, bulls, they buy, they get out below here, but then they got to buy again above a bull bar. Maybe not here because it's a bear bar, but then they buy here. And, where do they get out? They probably don't get out, but if they get out below any of these bars, they've got to get long again. If they get out here, they've got to get long, then they get out. Or, it's always in long, but, double top. So maybe they get out here, but if they don't get out, they keep their stop down here. And, I'd get out here. I think it's a second entry. I think it's it's a wedge, 3 pushes, so it's possible high of the day. So I'd definitely get out, probably go short, but then the bulls got to get long again because it's still always in long, never went short. If bears get out, they've got to get long again. If they get out, they've got to get long again. If they get out here, bears gave up, so no reason bulls gave up. So always in short, look to sell, but then you get a wedge. It looks like a leg in a trading range, and bears get out, aggressive bulls buy. And I know I was kind of talking fast. You can rewind that if you want, but to me, understanding that helps. I'm scalping more in the sense that my goal is it's kind of like Al's goal, but I'm not near ready to do it or try. And that is to just buy relentlessly. Excuse me. Let me catch a breath. To just buy aggressively as it's going up. And you just keep buying, all through here. Buy the close, buy more, buy more, buy more, buy more, buy, but it's hard. But to me, my main goal right now is to scalp a lot and try and hold these kind of markets. So keep a fourth positional or half position and just hold. Little pieces. The one thing I've learned and realized, and it took me a long time to realize it and accept it, is if you can eliminate the big stuff. And I know this seems obvious, but I think for a lot of people, they have to. It's hard to accept it, and that is, getting rid of the little. I'm trying to think how to put it. Getting rid of the simple mistakes. Or better yet, just becoming more profitable in terms of percentage drastically changes one's results, And what I mean by that is, I think one is far better off nailing, it's like, think of it in sports, in baseball, just, you don't have to hit a home run, just hit little singles, I'll use that term. In the E-mini, just look for a couple 4-point trades a day, or you see this bear breakout, just sell, scalp out 10 or 20 cents. Just look for little things and just work on consistency. But at the same time, you've got to know where those little things are. That's kind of like through here, it's a tight channel, so any bear that's selling, number one, you have bears who are significantly disappointed down here. So you have to understand that theoretically they're selling up here. And if they're selling up here, they're trying to get out at break even. So, you have to understand that, it's, a double top, second if you're short, I'm going to sell. Well, if you do that, you've got to know that, hey, this is very climactic, multiple legs down, possible exhaustion. So, targets were up here. We may close the gap. This is probably one of two legs up, and this is a tight channel. Look at the 15-minute chart. Boom, boom. So two legs down, but tight channel. 30-minute chart, very tight channel. So probably buyers below. And look at that, the market's just open. You can see we gap down. So just with that, the open right now, I'm thinking, okay, leg one, leg two. So obviously, we didn't quite reach that. But I think we'll get up to here. I think we're going to close this gap. So, again, I'm looking for, really working on just consistency these days, Over here, sell this close, stop up here, and just go for a measured move. Take part off, swing the balance, and then at some point, you just get out. And if you want, you can keep holding, and the reality is, at this point, you're going sideways for so long, bad follow through the downside that, really, to me, it's not worth it, even though we'll probably get a little more down, but, there you have it. So, close to 50-50, here. Let's look over here. Well, it's obviously 5 in the morning. I'm not going to be trading them, but strong bear bar, just sell. And take part off, and then worst case, you get out somewhere in here. Going down, just sell, take part off. But, possible final flag, triangle, tight trading range, will probably get back into the range. When you look at this, it's just not, it's not super impressive. And if you look over here, we're retesting down here. So now I'm thinking, okay, that's bad. But again, up here, just pick a bar, For me, I think some of the best trades ever are, here, breakout bar. Well, if I just sell up here and put my stop all the way up there, I'll probably win before I lose. If I theoretically sell the market, put my stop up here, set a target down here, 1-to-1, I'm probably going to win before I lose. And I doubt I was alone in that. Or, look. So, and even at this point, the math is so high, I could sell, probably just scalp out at 10 cents or 20 cents. Now, you get into the issue of that might be the minimum. I think the math's acceptable, but when you get this strong of a breakout, the first reversal up's going to fail. So, really, if the risk is big, then certainly, take profits to reduce your risk. But I would only, I would take profits. I would try and scalp out because I know that, number one, this is climactic. It's a sharp sell-off, so traders are going to take profits. And look, that's what they're doing over here. I don't think this is bulls buying as much as it is traders taking profits. But then you get a bear bar, bad follow-through, bear bar, bad follow-through, bear bar, bad follow-through. It's 3 pushes down. It's a wedge. So we broke below this low. Strong breakup to the upside. Always in bulls, always in bears get out. So, that's why always in helps. If I was trading always in and would just say, if this was E-mini, or if I was only trading one position, I would sell, I wouldn't get out, and I'd get out, probably, but I'd have to get out above that bull bar. So if anything, I could probably buy and make a scalp. Over here. Done, 1 a.m., but hey, let's just pretend you were awake. You buy at the market, trade so small. This stops about 79 to, let me look at that again, 119.79 to 120.75, so almost I don't really know how to. I can't. That's about 100 pips. You know. So if you were going to trade a standard lot of 100,000 units, that's, I believe, that's around 100 pips, and it's around $7.50. So if you buy up here, put your stop down here, you're risking $750. Well, if you're uncomfortable with that, reduce your position size, trade small. And if you don't know what to do or what to go for, just say, you know what, I'm going to go for 1 times my risk and set a limit order to take profits up here. And you can see that's what happened up here. Or, you just buy at the market. 20, that's about $1 up. So you just take profits, It's okay. You could buy this close at 120.77 and take profits at, 20 pips, which would be like right here if you want. However, when the average bar size is 30 pips, give or take a few pips, I would go for 50 pips at a minimum, 60 pips. And, if you did that, this is about 40 pips, so just take profits though. You could sell, take half off up here, The reason it's okay to move your stop, so you take partial profits, traders will scale in and buy, back part of their position, stop down here. And, new breakout, take profits again, stop down here. Buy partial profits again, new breakout, take profits again, stop down here. And eventually, 3 pushes up, spike, pullback channel, maybe a leg 1, leg 2, but probably not. It's maybe, well, I guess it was. I thought it'd be a little further up, but I guess it wasn't. So, reasonable to take profits there. Maybe it started here. It doesn't really matter. So, it's about trading small, taking profits. That's all the time I have. I'll be discussing more about Forex. But again, I think Forex is a fantastic, I'll put it this way. If I was going to start out tomorrow, I would trade, if I could, I would trade stocks. But you can do very, very well trading Forex. So, whoever's out there, and if you don't think you have, if you're saying, well, gee, I don't have the capital, I don't have 25,000 to trade stocks, I can't do that. Well, open a Forex account. There are all sorts of things to do in Forex, and it's great because there's 24-hour markets, so you just got to kind of figure out which ones typically move at which time zone, and there's plenty to do, Here's Euro Great British Pound, and obviously, 2 a.m. it's going to have most of our movement, 2 a.m. Central Time, because that's when their stock exchange opens. But USD Japanese Yen, maybe that'll have more movement, around, decent movement in the morning. Here's, 7 a.m. Here's nighttime. From at Central Time, this is about 8 o'clock at night. And you can see from here, it's about 64 to 52, so that's about 10 pips of a range. So, just sell, bear breakout, bear follow through, sell at the market, stop up here, and then just go for 10 cents. And if you, or 10 pips, 29, and you could have, but a lot of traders went for 10 pips. Strong rally, stop down here. Maybe you trade small, buy 50% pullback, scalp out. Move your stop, 50% pullback, add on, scalp part out, or all. Buy again, try and scalp out. Bear breakout, so you may get a higher low. And this looks like, a trading range, a bull channel's a trading range. It's just, at this point, you saying, gee, yeah, it's a bull channel. I'm going to draw my channel. I don't draw channel lines that much. That doesn't mean I don't look at them, I still draw them occasionally. I just don't draw them all the time. But, it doesn't matter. It doesn't matter to me where this line fits. I know that, hey, bulls are buying pullbacks. They're scalping out at new highs. Bears are selling to make money. So they'll sell this high, scale in, make money. They're going to sell this high. They're going to sell this high, scale in up here, and make money. The channel. Channels evolve into trading ranges, which means I know that it's only a matter of time. The odds favor one of these higher lows getting hit. So if I put my stop down here, it's a channel. I'm probably going to get hit. Strong enough move down so that I've also got to be thinking, 50% pullback area. We'll probably, if I sell this close somewhere in here, put my stop up here, and I sell more halfway up to my stop, I'll probably make money. So look what happened. I wouldn't technically, but I could if I scalped out. So you just have to think reasonably. There's so much to do in here, and you just gotta think about it. Over here, I'm thinking, okay, very disappointed by the closed bulls. Probably best to get out of profit. So look what happened right there. You can see bulls who bought this close had one quick chance, then we sold off. Then we got a bear breakout, another bear breakout, bad follow through, another bear breakout. So probably always in short, but your stop's all the way up here. So probably better to sell up here. And the bulls who bought these lows probably will make money. And they did. But as long as we hold above here, maybe we're back to always in long, but if we don't break above, we could easily get a second leg down. And we got our second leg down, but it looks like we're getting into the trading range. So I think you'll have enough disappointed bears that they'll get out here. But, strong enough sell-off, so second leg down likely. A lot of bear bars, looks like bulls are scalping. You may have trap bulls, so we may get a bear breakout. And, so far, we're getting into a trading range. And look what happened. Spike, pullback channel, tested the bottom. Strong enough breakout, probably at least a second leg up. So bulls will start buying. They're going to buy closes. And wow, that was a pretty big bar. But that's what I was talking about. Bulls are trying to buy 50%. Tried to buy 50%. Strong bull breakout. At this point, you just buy. If you're gonna, I gotta kind of do that just so I can click on the bar. But 86 even to 85. Okay, so it's only about 50 pips, but trade small. Buy, put your stop down here, and you say, okay, I'll take part off at, I don't know, 30 pips higher, or maybe I'll say first down will fail. 20 pips. So, and honestly, probably that'd be 20 pips. So you can see traders did that, 86 to 07, 8, 9. You can see some traders took profits there. Other traders took profits higher. So you could probably take profits up here. And then look what happened. Strong sell-off. So probably forming a trading range. Bears making money easily. We'll probably get a second leg down. But trading range most likely. And then we're just going sideways. So hope this helps. Comment below if you have any questions.